See, we got about a minute till noon. I'm not sure how many we have on right now, but we'll wait a little bit here. It is noon. We're gonna wait as people kind of get jumping in here in just a minute. Jeremy, can you hear us yet? All right. I can't hear you. Are you muted? It's always fun working with technology, and and but it's great to be here this afternoon over this lunch hour as we talk about insurance. I know it's a favorite topic among churches, um, but we'll wait a couple of minutes here, let people jump in. Um, I think we had over 100 people um, sign up to participate in this webinar, and so which means we really have hit a nerve as far as churches needing to figure out insurance and how to deal with insurance. So, um, kind of what we're going to be doing is we're going to try to keep this right under an hour. I know for many of you it's lunch break, and so we want to make sure that we honor your time as well, but also give you some information on um, insurance and what's going on there. Uh, Jeremy, do you know if Deanna is going to be joining us today? I still can't hear you, Jeremy. We'll wait a couple more minutes here as people log in and get on. Um, nope. I could a minute ago, I thought, but no. We're going to, I'm going to open us in prayer as we start this afternoon, and then we'll see if Jeremy can get connected as well. Let's pray. Lord, we thank you for the day. We thank you for the ways that you move. We thank you for this conference and for your church. We pray you would bless us as we seek to be wise stewards of all that you have given us. We pray this in your holy name. Amen. Jeremy, now I have audio there, but you're muted. Let's see if you can unmute and we can hear you. No, I still cannot hear you. He's going to keep working on that, but as he's doing that, welcome to everyone. I'm excited that we're going to be having this conversation this afternoon about insurance. We have Jeff Shropshire here and Jonathan Bobs with us, and we also have Jeremy in video form, but not audio yet. We'll keep working on that as well. Most of y'all know me. I'm Rick Enns. I'm the conference superintendent here. One of the things that we have been getting constant questions from churches about church insurance. And so we thought we'd just kind of set up this webinar trying to figure out and answer questions for churches. If y'all have questions, you can put them up in the chat or the question up at the top. Emma Stoneham is kind of monitoring all of this for us. So if you need technical information, you can call the conference office and she can help troubleshoot as well, or you can text Emma at westplainsgmc.org. I want to just take a moment as we kind of start, and really the first question that I have that is just kind of this general overview question, and Jeff, we'll start with you. What is going on in the insurance industry right now, and why are rates so high? If you can just kind of tag that question there and go from there.
Sure. It's a statewide, if not even a statewide, it's a multi-statewide issue. Kind of a perfect storm as you would have it, to where the number of catastrophic storms and the amount of claims that carriers have had to take over in the last 10, especially the last 5 years. On top of that, with the inflationary rates and the capacity issues of reinsurance markets. And when we say reinsurance market, every insurance carrier has reinsurance on top of them. And so they actually buy insurance, especially for large losses. And the capacity for property, this has all hit at the perfect time where the state of Texas has had a number of billion-dollar storms, as well as the Midwest. And as we've seen, even with the fires in California, it's just been catastrophe after catastrophe. But then on top of that, with the inflationary cost of the materials and the amount of roofs, you've seen more input of independent adjusters and people getting involved in claims, and the prices of claims have gone up dramatically. So we kind of hit a pinnacle at a point where the carriers had basically it had enough. You'll see this too in your homeowners and auto insurance and other forms of insurance. Everything is up right now. But churches have what we've seen has taken a tremendous hit, just because in the majority of the time they have the larger square footages, and most of the time the buildings are also older, which the carriers are not liking right now, and they want a lot of updates. So it's just kind of a prime condition for not a lot of capacity for property insurance right now, especially admitted carriers. Very few, if any, are in that marketplace. It's usually going to non-admitted carriers. And then trying to even get replacement costs is very difficult right now for many churches if they're older and they haven't had the updates. So it's kind of a perfect storm.
So, Jeff, you and I have talked about that before. There is all of this going on, and you said it's not just Texas; it's multiple states.
Multiple states.
And we also deal with New Mexico as well. We have New Mexico people on the call as well.
So New Mexico, their issues. New Mexico, of course, unless on the border, the hail is one thing, but you're going to see it with the wildfires. Of course, what we all know what went through Ruidoso. We know that the wildfires are becoming just as much of a weather event concern for carriers as is hail. Tornadic is always a concern, but those are the widespread kind of carpet bombing events that generate the bulk of the claims. So if you're in the mountainsides of New Mexico, you're going to see the same problem due to wildfire exposure, as opposed areas of New Mexico, maybe down with the Las Cruces area, down in that area kind of towards where El Paso is in Texas. That's kind of the lovely spot where nothing really bad happens, they say. But other from that, we almost all have some peril that we're concerned about, that the insurance carriers have all ramped up, and they're being very selective and being very careful on writing new business. And in some cases, they're non-renewing businesses, buildings in these areas due to capacity issues.
Thanks, Jeff. We also have Jonathan Bobs on. He's with Burns Wilcox Brokerage. Jonathan, what would you add to this conversation on that?
I think Jeff hit the nail on the head. I think he's reading my notes. The only thing I would add is that, insurance is a socialist environment. So, even though the people who take the losses, they're going to feel the most pain, they're going to spread that pain amongst all the insureds. So kind of like Jeff said, with homeowners and auto, you may not have a claim, your insurance is still going up. And it's just purely insurance is a socialist environment. And they're going to just spread that around. You could even take this back. We've had, as Jeff pointed out, we've had some catastrophic events in the last 5 years, but really what started it on the E&S side, we are kind of coming out of the hard market. Our hard market started around 17 and 18 when you had Harvey, Irma, Maria. I think Louisiana got hit with 2 or 3 hurricanes in the same year. So we've gone through that hard market cycle. Our market is actually starting to mellow a little bit. So there is some relief coming in the non-admitted space, but it's still gonna represent a big increase from what you guys were paying in the admitted space.
Jonathan, can you say a word about what non-admitted means and kind of what area you're in with insurance?
Yeah, so I'm in the non-admitted, what we would also call E&S, which is excess and surplus line. And really, the short of that is, on your admitted product, that's your Hartford, Travelers, Zurich, Liberty Mutuals of the world. And all that means is that their forms, their policy forms, those are all filed with the state. Whereas on our policy forms, our carriers do not file with the state. It doesn't mean you're getting bad coverage. It just means it's just the process. We file the taxes. Our company will file the taxes and fees with the state. And because they aren't filed with the state by the carrier, there are taxes and fees. So that's the main difference. From a coverage standpoint, our policies are more a la carte. So where if you had a Travelers or a Hartford, they're going to give you all these great throw-in coverages, some that you might not even need. Whereas with us, a lot of times we've got a form, it's going to have these coverages, but then we can throw in enhancements, or a lot of times if there's coverage that you would want that you would normally get in the admitted market, we charge extra for those. So and ultimately, what our job in the non-admitted space is to do is we take on higher risk accounts.
Deanna, is Deanna on? Have you been able to get on, Deanna? Can we hear you?
Yes, I'm on, but not the camera. I can't get
Fantastic.
that to work.
Anything you'd add to that conversation on that question?
No, just right now it's a real challenge to place new church accounts just because of the limitation of property for our area. Like I said, the E&S market right now is our best option.
One of the things that I'm talking to churches, and if they're getting renewed, their rates are twice, triple, if not more, of what it was before. And I mean, you've talked about some of these issues that have happened, but that is some major sticker shock for churches as they're trying to get renewals, and then some are not being renewed at all. Jeff, any thoughts on that as far as those renewal rates?
Well, typically if you're getting renewed if you're getting a renewal from a church mutual or a brotherhood or somebody like that, I mean, typically their renewal is in many times still going to be probably a little better pricing than even what you may see in the excess. Yes, you can go in and change some policies and forms, but getting a renewal is a great thing, and that's just not something that we're all. It sounds so strange after doing this all these years to have a celebration that you got a renewal and the increases are up 25%. That there's nothing to smile about there, but at least you have coverage. Many times you're finding where if you've gotten the non-renewal, there's a even larger increase by going in the other direction just because you're entering into the E&S. Now the coverage, like Jonathan said, the coverage is good and all those things are good, but you run into some different things with pricing. They're either paid in full or they're having to be financed. There's just some additional issues that come with it. So you want to look at if you get a renewal, especially in admitted care, you really want to look at that very strongly to see if that's something you can't afford. And then if you need to look for other options or maybe go out, like Jonathan said, and write a different kind of policy or different kind of coverage, you get with an agent to do that to see if it responds exactly the way your church expects it to respond in the event of a loss. Yeah. The thing with churches that I've found over the years is that trying to communicate that information and making those decisions with committees and boards or individuals is a big responsibility. Because it's hard to explain all those things where everybody understands and then the congregation understands. So then at the time of a loss, if somebody elected, for instance, to go from replacement cost value to actual cash value, which is a very big difference, but many times it's a lot less. But when the claim occurs and the payout occurs, everybody throws their hands up and says, what were we paying premium for? So the communication side from an agency standpoint, in tailoring these coverages to what churches have been used to over the previous, unforeseen years where it's been just basically kind of quoting the same stuff with different carriers, that's all changed. So the level of understanding is what makes it a challenge of trying to get enough people on board with committees and stuff. We're in it every day, but it's really communicating with everybody is one of the hardest things to understand because there is a lot of changes for the consumer to try to figure out. And our sympathy is to them on that as well too, because it's not easy stuff to sometimes visualize or rationalize until a claim occurs.
Yeah, it seems like in my conversations with you and others, it is kind of a whole new world with insurance, and we can't just, well, this is what we used to do, this is what insurance used to be. All that's kind of off the table, in my opinion, at this point. We kind of have to start over, and communication, as you said, with a board or church board or with congregation, helping them understand that is going to be critical. Jeremy, you kind of bridge that gap between you're a pastor and you also sell insurance. Have you found any challenges in that regard?
Yes, it's been interesting. Can y'all hear me this time?
Yeah.
Yes,
Good.
Okay.
yes.
It's been an interesting adventure because being in the role of being a pastor and also being an insurance agent, I have had churches, not just GMC churches, but all kinds of churches ask me for help. And so they've asked me to help consult, to really help them to look at kind of what Jeff has said, look at their rates, look at the type of coverage they're receiving, and see what are their options. For some companies, or some churches, because of the deductibles have gone up quite a bit, they're looking at programs like a deductible buy down. And so they can pay money to help get that premium down, or not get the premium down, but get the deductible down some to make it a little more palatable in case of a loss. And so in case of a loss, that's
Explain
an
that,
option
Jeremy.
that some churches.
Oh, he just froze.
Uh-oh. Can y'all hear me? You should hopefully be able to hear me still.
Yes. Yeah, we can hear you.
So a deductible buy down, say a church comes back, they've been having a 1% deductible, a lot of times for wind and hail. And their renewal comes back at 5%. That can be a pretty big increase when it comes to how much money for a claim, how much money they're having to pay out of their pocket, out of the church's pocket, before the insurance company will actually step in and cover the cost. And so a deductible buy down allows the church to buy that 5% down to a lower percentage, so that the insurance is still paying a little bit more, not as much as they used to at the 1%, unless they're buying it down to that. But unfortunately, sometimes the cost of getting it down to that 1% is going to be more than what you would just, than what the deductible ends up being. And so it's not very it's cost prohibitive to do it that way, but it allows the church to actually lower the amount of money they're having to pay out of their pocket in case of a loss. And so it helps them to get that rate down from that 5% down to a lower percentage in case of a loss. It makes it a little bit easier, especially for the first year. A lot of churches are doing this because it's kind of a shock. You get this renewal and all of a sudden you're like, whoa, this is way more than we budgeted. And so that's an option that some churches are using just to help get things in just a better sense. And it depends on, every church is different. All of our churches are different sizes. The amount of money they have in the bank is different. Some churches are barely hanging on. Others have surplus. And so just where the church is at, it's figuring out, what makes the most sense for each of our local churches.
Yeah, so I've seen churches do some of those buy down before, but some of these, as you said, Jeremy, costs are going up, that it's not even cost effective at times. So one of the questions I have is, what can churches do really to help with rates at this time? I've heard some say, don't make as many claims, but Jonathan, I'd love to hear from you again on thoughts on what churches could do to help with rates.
Sure. So, and I'll just speak from the non-admitted side, since that's what I represent. So on our side, again, you're going to be, it's just apples to apples, we're going to cost more than the admitted market, right? Or the mutual companies. So for us, it's real important to get creative. There's obviously the easy levers we can pull, stripping away some coverage. I don't mean to make it sound so aggressive, but just, maybe buying a lesser form, which is not always ideal, but it's something that will impact the premium. You can play with the deductibles. There is the buyback option. that we've been discussing. That's one way that you can kind of offset costs, is that you just leave the carrier with a higher deductible, and then you attach on that second policy. That's one way to kind of do it. But again, you're still paying the premiums for that buy down policy. One thing that we've done, and we've encouraged a lot of churches to do, is buy any amount of coverage. And one thing we can do is what I would kind of call a loss limit type policy. And so let's say, for example, you had a $10 million church campus. We take a risk management approach and we say, what are your concerns? If you've got enough spread of risk with a couple buildings, even if it's on the same campus, you might not be worried about a catastrophic fire burning down the whole campus. Maybe you're not worried about a tornado in wherever you're located. Maybe it's just wind and hail. So the first part is to just kind of find out what the pain is. And then with this loss limit deal, what we could do is, again, if you had a $10 million church campus, we could maybe come in and just give you $1 million worth of coverage, or 2.5, or 5. I mean, you really can kind of pick. That's where on the E&S non-admitted side, we can get a little creative with that. We can come in and give you a limit that isn't going to necessarily insure the full limit of your campus or your church, but we've at least given you some coverage to where, hey, if I have a wind hail event that blows through and blows the roof off, well, $2.5 million is plenty of money to replace that roof. Or if we have a fire, we don't have a building that's worth more than 2.5 or 5 million, so that might be enough of a limit. So, and I know that this is getting a little technical, but I don't want to get lost in those weeds. But basically, the gist of it is that we just, we don't necessarily insure it to full limit. Now, just to be clear, what we would do is we would value it appropriately. So if your church is valued at 10 million, if that's what the replacement cost value needs to be, that's how we're going to value it. But what we'll do is we'll go out to market, and we'll just go to market ABC and say, hey, I've got a $10 million church, but I only want $5 million worth of coverage. And so they'll send us a policy that gives you a $5 million policy limit. And so you're covered. If you had a total loss, obviously you'd be out $5 million in that scenario. But a lot of churches aren't necessarily worried about a total loss. So it's one way, in conjunction with playing with deductibles and maybe playing with some coverage, that, it just has a cumulative effect where we can start bringing the premium down.
So Jonathan,
and we encourage, go ahead.
Oh, I'm sorry. I was just going to ask, would that create a problem when there's like a hail claim that you should have had 10, but you only carried 5?
No, because that's why it's key to value. What we do not do is go to the insurance carrier and say, hey, this church should be worth 10, but we're telling you it's worth 5. That would be an ACV co-insurance nightmare, right? What we do is we say the church is worth $10 million. The carrier is going to rate on that $10 million. So your application would say, $10 million. We're going to rate against that. But our policy is going to come back. It's only going to have in theory, a $5 million limit. So that's the key, is to value it appropriately so that you don't have the co-insurance penalty. But there's nothing to say that you can't go out and just buy $1 million worth of coverage. In some regards, think of it kind of like a GL, right? It's just, we can stack property markets on top of each other. So I could have one market give me $1 million or 5. I could have another market do 5 on top of that. So essentially what we're doing is we're just going out and we're just building that first layer of that tower. And we're just saying, hey, here's a $5 million limit. But again, we value the church appropriately, so you don't have that co-insurance penalty. That's kind of how we work around that.
And Jonathan, isn't the wind and hail deductible still based off of that $10 million?
It is. It's always going to be based on your total values that are exposed. So, there is no, I think the answer is there is no silver bullet really that's going to solve all the problems, right? And so it's just like, okay, we pick our poison. How do you want to do this? Where's the pain? What are you concerned about? I mean, truly, if you weren't worried about wind, you could buy an X-wind policy. If you weren't worried about fire, you could go buy a policy for wind only. So, I mean, there's all kinds of things we can do in the non-admitted space. But what I am encouraging every church to do, even the small ones that are, they're barely holding on, buy something. If you can, buy some type of limit, because at some point we feel like those mutual companies are going to come back into the marketplace. The admitted carriers are going to come back into the marketplace. And if you've been bare for 3 or 4 years, I can't speak for those underwriters, but I believe you're going to have a very tough time getting your church back into one of those admitted programs, admitted markets, if you've been bare for 4 or 5 years. So you've got no history of losses. And so if you buy yes, ma'am.
Well, just on that, I just had one question. So if you were to, like, is there an issue if you start like this year, like with the 5, and then next year the church decided they saved all year, and then so next year they wanted to go back to the 10? Would the carrier question that, or would that be okay?
That would be okay. The carrier may just question it just out of curiosity, but we're in a place in the market where, like I said, on the non-admitted, we've been living through this hard market now for 5 years. So underwriters are used to this. With the underwriters I work with, the markets I work with, they're used to this by now. They understand that money's tight, especially for churches. This church problem is not a secret, and everybody knows about it. So, all the underwriters realize the trouble that churches are facing. So, no, it's absolutely not an issue. And that could be a situation where we would just have that same carrier maybe do the full 10, or you go in and just bring in another carrier, and then you can kind of spread the risk between the two. And in theory, that should help with costs, rather than leaving one carrier to take on that full exposure.
Okay, thank you.
Deanna, thanks for joining us again. Deanna's with Sanford and Tatum. I don't think I mentioned that earlier, but Deanna, anything else you see that churches could do to help with rates on their end?
Well, I think we kind of touched on it a little bit earlier, but with what we're looking at now, the small claims, they don't need to be turned in. But unfortunately, in our area, the wind and hail are going to be there. So there's nothing I don't know that we can do to avoid that. There's some churches maybe have a metal roof, but a lot of them don't. So there's just not a whole lot we can do to avoid the wind and hail. But the higher deductible is saves some on premium. But I don't have anyone right now that it's taken. They won't look at anything less than a 3% wind and hail. So that's sometimes unaffordable for the small churches.
Yeah, a lot of the churches, and Jonathan touched on this a minute ago, are looking at actually not going without any property insurance at all. And I've even talked to one church about they were just going to drop all insurance, and I said, don't do that. You want insurance everywhere you can afford it. We're talking specifically about property. You want to make sure you have, your directors and officers and your liability and other things. But if you can afford property insurance, I think it's probably best. But we do have some of our smaller churches. They just are the rates are now their highest, the highest expense that they have. Jeff, can you talk about a little bit the cons of going without insurance? Any other cons or issues?
I think Jonathan hit that. The marketplace is going to be very difficult to get back into, because right now they're being very selective on even who they write and the conditions that things are now. And then you're basically would be going with a period of time where there's avoidance of no record. We always talk, if you're out shopping your insurance, you always have to ask for loss runs. And you do all those things. Well, those are at least a documented record that shows some sort of history of what happened or what didn't happen. It gives an underwriter something to work off of. when there's nothing there, they're going to underwrite it a lot harder, a lot more scrutiny, and I think you're going to see a lot less people wanting to look at it and jump on board. I think the positioning, I think the thing that everybody has to do now, which is kind of hard to do because it's a crisis kind of situation financially, but we need to start looking into the future, because what Jonathan said is everything always turns. I mean, this is as bad as I've ever seen it, but but it's a market, it's a commodity. It'll always come back around. Once figures out a way to make money, the carriers will come back around. So you have to go through the bad times, just like the stock market, to get to the good times. But the one thing I see with carriers, what they all want, especially with our smaller churches, I'm trying to work with our clients to position for the future. Yes, I think you need to have something. But two, you also need to be doing things, especially on these smaller buildings, to make these structures more attractive to a carrier. Updates are very, very important right now in the areas of electrical, plumbing, heating and air, and roofing. And a lot of the churches, are older, and they have not been taken. I shouldn't say taken care of. That's really not the right word. But where you have a commercial building where you're in it all the time and you're working in it all the time, things tend to be more updated and kept up, and plus the monies come in differently for a church. It makes a lot of sense, and we want monies to go to ministry. We don't want it all to go to an insurance carrier, but at the same time, you need to start addressing by having electrical inspections, plumbers coming out, looking at the building, making sure that these things over a period of time, you start investing back into your structure if you plan on keeping it and can afford it, because that is always going to be an issue that stays with us. If the admitted market turns back on, they're going to be scrutinizing the best structures for the best premiums, or to even have an access to it. So it may turn back around, but if your building has had no updates in 30 years on electrical, plumbing, and there's nothing to sell to the carrier, then you'll still find yourself in the not admitted market space and kind of struggling all the way. You'll never get to the point to where you get the benefits of the lesser premiums. So you need to be doing things now that you can afford, but also, unfortunately, still planning for the future. Because we have a lot of churches out there that maybe have somewhere between 10 or 20 members, and they're trying to sustain a $2 to $3 million building. And that would be an issue for a commercial business. And so you're going to have to think long term as well, because if the building just gets older and older and older, you're going to stay in this zone. I mean, you're just trapping yourself. So it's really hard to talk about that when we're asking to collect more premiums for even sometimes lesser coverage. But we got to have a strategy for the future, for the foundation of your church to grow when things do get better as well, so you can get relief from this pricing.
Sure. So some of the things, just to kind of recap, that I've heard, and y'all tell me if I miss anything. Take care of your building, update your systems, raise deductibles as high as you can. Don't make small claims on your insurance. Possibly insure for less than the full amount could help save money. Or buy down deductibles as well with a second policy. Anything else I missed there from any of y'all?
I don't think so.
I don't think
I
so.
think that's all.
And I know, because I've talked to churches, some are probably going to choose to go without insurance, just because they see they can't afford it. The one thing I've told them is you better be saving as much money as you can monthly when the hailstorm happens. Anything else you would say to any of y'all can jump in and answer this? Say to a church that just says we're not going to cover our building.
Well, I mean, we've kind of talked about it, but you're really going to have to understand what those costs are. And if you're talking about just property, I mean, I would never advise dropping liability coverage ever. Those are somebody gets hurt, a child gets abused, anything that comes through, those are unknowns. Your property is a known. You know what you're going to lose. But the question is does your congregation and everybody understand that that's a decision made by a board or a committee? I mean, because we have times where we've had claims where congregations were very surprised that they had no insurance. And that's not my business inside of a church, but at the same time, that provides a lot of stress for board members and everybody else when they're having to explain. But if it's expensive now, it's just going to be more expensive, because I don't think I've seen anything this spring that says we're going to have a mild weather event. I'm not a weatherman, but I've seen enough dirt already to know that once those fronts start coming off of the mountains, I mean, if it's going to do with clouds what it's been doing with sand, I mean, it's inevitable that someone on this conversation is going to have a significant event that could bury their church. And so you need to have a disaster plan on that too. What would happen if that happened? Where are we going to meet? I mean, the mission of the church is very important. It's not the building, but you need to think all the way through what would happen when the storm comes, especially whether we're insured, if we're insured or not. You still have to think that through for your community. So there's a lot of challenges with making that decision. You really need to think through it and talk with any of the insurance professionals about walking through it. Everybody should be able to take you through that scenario. You'll make the decision, but we can maybe help you think of some things that you might not be thinking about.
Absolutely. I think if a church was going to decide not to insure their building, that would need to be a church vote. That would need to be where everyone is on the same page and understands. And so no one's shocked later on, and they would need someone to come in and kind of explain uh, the challenges of that. Because as I think both Jonathan and Jeff, both you talked about, you're probably going to have a hard time getting insurance again ever if you drop. It's going to be hard to get back into that market.
So I can tell you this, my markets, just to jump in real quick, my markets that will write insurance for any type of risk that has been bare for, let's say, over a year. And this, if you extend that out, it's even worse. But you're talking $50,000 to $100,000 minimum premium just for the property. That's where it's going to start. It does not get better with time, without when you're bare.
It's good to know. One of the things, we're going to get to questions here in just a second, but I know back in the United Methodist days in New Mexico, there was a policy for the whole conference, and that was an option. And I've had some from New Mexico ask, can't we do that again? I'd love to hear from y'all, those of you who might understand this. What is that an option moving forward at all?
There is. I've actually looked into some programs for the Global Methodist Church as a whole. I was specifically looking at just the West Plains Conference initially, and kind of the carrier approach who actually has programs in place for churches that would cover, and this would be for property and liability. Unfortunately, they are saturated in the state of Texas. And so we can get coverage for our churches in New Mexico, but our churches in Texas, until they get other churches covered in other parts of the country, unfortunately, they're not able to write any new churches in Texas. But there are programs available out there. It's really just finding a carrier that has the ability of writing that isn't saturated in one particular area to really get a program going.
Right, because
And
we
on
have a
my
lot of
side,
companies that won't take anything in Lubbock County. So,
Wow.
and on my side, we can, that might be where we can be helpful as well. Is just, in the non-admitted space, we build large insurance, what I'll call quote unquote program, but we build large insurance policies. I write some churches that have $450 million in values, property values, and we put policies together for all of that. They have campuses all over the country. So that's absolutely something we can do.
Jeff, anything you'd add to that?
Yeah, it really depends on the carriers. I've had some histories with some of these programs, and the key to the programs is they have to be profitable. And the problem that I've seen with the way the programs, they may start off good, but you have to get the really good risk involved to help support the risks that aren't that good. And everything's so selective right now. I mean, it makes it's taking the whole concept of insurance and shrinking it down into a smaller model where you disperse the risk. But the problem that's happened with a lot of those programs over time is that uh, if you don't have everybody bringing up the same level of standards, taking care of their buildings and everything like that, it can take away from those churches that are self-sufficient, that are in good shape and ready to go. It can pull from them to take care of the others, and there's nothing wrong with that. But sometimes it can blow up the programs, and it's would be based. Jonathan and the carriers would have to figure out the equation of how to make it a profitable scenario to where everybody's still getting good coverage. Things like that have been tried and done over a long period of time, but they eventually, sometimes, if it gets tilted, then it's hard to keep them up. So, if they can figure out a way to do it, of course, it'd be great. But it's hard enough now to write one. So I don't know, especially up here in West Texas, but you'd have to pull some folks down in El Paso and all those different areas that don't see the storms as much that where you're going to feel comfortable taking that diversification, because Lubbock, Wichita Falls, Midland, Amarillo. I mean, well, we've even seen it in the last few years. Austin, San Antonio have had major large hailstorms, and they're not supposed to get hail. So apparently God doesn't like that area sometimes too. So that's how that sometimes works. But it'd be great if a program could be done. I don't know if this climate's the perfect one for it, but maybe eventually that's something we could get done. That would be wonderful.
Good question. I'm going to answer some questions. We have several from those who are attending. This first question, it says, I've had some churches and leaders ask about a conference pool. Can you explain that concept and the pros and cons of it? I think I asked that to you, Jeff, a while back. Kind of churches, and it kind of covers this same thing we were doing before, but
Right.
it'd be it basically would be a self-funded thing. Jeff, do you have anything to say to that piece?
You're talking about just pooling monies over to the side to
Yes,
either pay deductibles or to pay for claims, either one.
either one.
I mean, it's the same concept of insurance,
Okay.
pooling monies together around to disperse it. That wouldn't necessarily be an insurance issue if everybody had their policies, but then the organization was able to find a way to manage funds to be directed to people who need help, either paying deductibles or for paying damages. I mean, I don't see that as really an insurance issue as much as a deductible funding mechanism, and it would just depend on how y'all would work that out to where, if it's the same calculation, would we have enough in the pool to take care of everybody and who gets what? And that seems like that's kind of a more of an administrative idea as opposed to an insurance idea, unless you went to the insurance
Yeah.
program sort of deal.
I think what this question is asking is if you didn't have insurance and a bunch of churches decided not to insure, and then they would pull money together to pay for any claims that came out of that.
It's basically a self-insurance pooling that would just be handled outside in y'all's organization. And you'd have to set up your own guidelines and your own rules for how it would be administrated and all that good stuff, and just hope that everybody doesn't get hit. And at the same time, if people are putting a ton of money into that, at the same time, you'd say, well, maybe we should buy a policy. All those ideas start sounding good until after you and I talked about it, I start writing it down, and then I'm trying to figure out, we have all these different size structures, and how do you make sure you take care of everybody who's participated in it? That's just outside of my pay grade. It's a financial structure that maybe could be done with a bank or somebody like that even. I don't know. But I think that falls out of my expertise on funding. The deductible would be an organizational issue to me.
I don't know if Jeremy, if you and I have talked about that at all, but have you heard anyone else share that idea?
I have not heard anyone talk about that idea specifically, but I'm kind of with Jeff. It ends up becoming, you run into kind of a similar issue as far as administrating it, because it really becomes, you're trying to self-insure. But if this all falls apart, then you run into the same problem that was discussed earlier, that you're then trying to get back into the either E&S or standard markets, and you're having trouble getting back into those markets, it's going to cost you more money in the long run. And I mean, let's just be honest, you know, you really need a third party outside person that would handle any underwriting as well as any claims, and to figure out, you know, what qualifies as a claim, what is covered as a claim. And at some point, someone's feelings are going to get hurt. And someone's going to feel like they weren't being treated fairly, and they're going to want to pull their church out because they didn't like how a claim was processed.
Yeah. You're basically creating an insurance company at that point.
Yes.
Another question here is, if you go bare, meaning you don't get a property for a year, does bare mean even if you carry liability for a year?
They look at it by line. So you're not going to get credit for having liability insurance for property policy. So if you go bare with property, they're just going to look at it as property. If you continue to carry liability, that won't help you when you come out of the market and want to get property insurance again. So they don't carry credit over for each other. Liability insurance is a lot less expensive than the property, but it doesn't help you obtain property insurance.
Okay, so another question. They have an insurance company, I won't mention it, but with 5% deductible, we recently had a hailstorm that caused severe roof damage. We filed a claim and they valued the property at $2 million. That means our deductible is around $100,000. However, the cost to fix the roof out of pocket is about $70,000. We're currently disputing this with the insurance company, but the outcome may be that we just have to pay out of pocket, which would mean no coverage, yet we're paying a high monthly premium. Deanna, you want to take that one?
Okay, correct. Like in a situation like that, it would have been beneficial if they would have had a deductible buy down policy. Of course, those are expensive, so a lot of customers can't afford that either. But generally, they kind of recommend you maybe get an estimate, you know, before you turn in your claim. That way, you'll be able to compare your estimate to your deductible, and then you'll know, hey, is this, you know, this isn't even worth turning in. It's going to be under the deductible. We just need to get it fixed. In that case, you'd probably want to get 2 or 3 estimates from a roofer just to have something to go by.
Yeah, and really the reality with the insurance there is you really need $100,000 in the bank, correct? Just to meet those
Correct.
deductibles.
You really need to be aware of what that dollar value is on your percentage deductible. I mean, 5% doesn't sound bad, but 5% of $5 million is rough. I think the percentage sounds small to a lot of people, but some of the policies that are coming out now actually show the dollar amount too. But we just need to multiply that to find out exactly how much cash you're talking about that you need to target, at least for one claim. That's not to say, and sometimes here you can maybe have 2, but aim at 1, okay, and then that's a good start.
Okay. Here's another question. FMC Level Land has a replacement policy, and we have a previous claim that has been paid at 1/3 of the claim. It makes it difficult to pay the renewal premium, which is significantly higher this year when we don't get what we pay for. How could we rectify this situation?
They may want to send us an email, and maybe they can send an email to Emma or Rick and can kind of send it to us. I think there's a lot more details need to be figured out before any of us can answer that question.
That's good. Yeah, some of these were very situational specific. Let me go to another. Would it make a difference if we group together with a conference insurance plan? This was the same thing we dealt with, or I talked with just a second ago. In the UMC in New Mexico, we had property insurance through the conference. Is that possible now in West Plains? As we said earlier, I'm not sure it's possible in this current climate. What happens, or what I've talked with several people, is typically what happens is the larger churches are paying a much higher amount than what they could get on the market to help cover all of the churches. Now that might be an option later in a different climate, but I'm not sure in all my conversations that it's an option right now. Jonathan, would you say anything to that? Agree, disagree on that?
On the non-admitted side, if we, the one thing that we always look at is common ownership, right? And so if you don't have common ownership, say a property investor has properties all over the place, right? We got to have at least 50% common ownership in all those properties to go on a singular insurance policy. So the key, I think, on my side is just how do we put lipstick on that to where the underwriters aren't coming back and going, this is 30 or 50 or however many different churches that. So I think what you do is you'd want to set that up as the Plains group or however that entity is set up. You would want to use that as the kind of first named insured. And that's just kind of putting it together. And then from there, I can go out to market and we can start building. I'm going to use the word program. It's not a true program, but we can essentially build a product for y'all. And just, but it is going to depend. And there's a lot that goes into that, right? So there's a lot of details, a lot of information. And I've found that gathering that information is always just the hardest part. Because if you've got 100 different churches, you've got 500 sets of loss runs or whatever it may be, right? It's a tremendous amount of data to try to compile. So is it something that our markets do? Yes, it's something that we do. But I just think the biggest challenge is just getting all that data put together. Building out a schedule, an Excel spreadsheet that has all the churches and the values of each and updates for each and years built and construction type. That can be challenging, but man, getting the loss runs, because we're going to want 3 to 5 year loss history for every location. And so how do you put that data together?
And I would think in the UMC, technically all the properties were owned by the conference. So it probably made it an easier program to put together, where now each of our churches are individually owned by the local church. Here, a couple more questions here. Are there available options just to have coverage for a total loss?
Well, in that scenario where you had $100,000 deductible for the wind, that's essentially what you're buying is catastrophe coverage.
Okay. Let me see here. Question, has the West Plains District considered being a vehicle for an insurance pool using a third-party administrator umbrella policy? Water industry faced a similar situation in the late 80s and was able to form a pool through a professional society. I think we've covered most of that, but anything, I don't know the nuance of that question. Jeff, you have any thoughts on that?
No, I think we've kind of covered that in general of how that would, you ought to have to pursue that through through the conference. But I think just what Jonathan was talking about, if you do something like that, what it would take to try to get all that data to put through, it's very hard to get updates on buildings. It's very hard just to get the updates, more or less everything else. So I think it'd take a lot of work.
Is Oklahoma also in this area of high claims?
Typically on our commercial markets, Oklahoma is almost ground zero for the problem. It's very hard up there to write admitted coverage, and I think they're suffering the same situation we're having.
And then let's see, I'm sure you'll cover this, but I want to hear a discussion regarding obtaining insurance for a church who either charters a scouting group or allows its facilities for a scouting troop, particularly the difference between a chartering organization and simply allowing use of facility. That's more of a liability than property issue, isn't that correct?
Correct.
Yes.
So that's under the liability. Jeremy, you have any information on that? I know some of our churches still have scouts.
Yes, so I am a former Cub master. I've wear probably too many hats. So if somebody wants to reach out to me offline, we can have some conversations regarding it. But yeah, I can talk to you from a scouting perspective as well as a church perspective and an insurance perspective as far as what your options are and what all that looks like. So.
All right, we're coming close to the end of the hour here. I just want to give, first, I want to thank all of y'all for helping today. So appreciate it. But I want to give all of y'all just a last minute, anything you want to say, anything else that churches should consider when it comes to property insurance. Jeff, anything else we didn't look at that?
No, I mean, I think it's one of those things that every church is individualized, so you just really need to spend some time getting some counseling with your agent, getting some ideas and some feedback, bouncing a bunch of ideas off. I applaud you for putting this together. I think the sharing of information is extremely critical. It's very hard now with the churches and every structure being different that one can say this is happening for me and this is not happening for me, and that's true. So I think that the education side of things, always constantly trying to find ways is what we're going to try to do. But I think you're doing a very good job of having this conversation, and we'd be glad to help anybody with any questions, whether you have, Rick, or anybody else. I applaud you for doing it, and I know that there's a real challenge here.
Thanks, Jeff. Jonathan, any final thoughts?
No, I think you guys have put a really good little group together here to give you a bunch of ideas. So I just echo what Jeff said. This is, I think, the first step in trying to figure this mess out, right? The only thing I might add, maybe, it was mentioned about being very careful about what claims you file. Keep in mind, as the broker on my end, when I'm looking at your loss runs, I'm looking for not only your claims severity, but I'm looking at your claims frequency. And so, sometimes it might just be, if you have that small deductible, that's going to encourage you to file every little claim you can. And so I would just say keep that in mind. We're not only looking at how bad the losses were, but we're looking at how many losses you have. So the cleaner you can keep those loss runs, the better.
It's good. Deanna, any thoughts?
Well, I had one other thing to add regarding building updates. And this is a situation I've run into several times where you've had the same contact at the church for 20 years, and they're the ones that do all the give you all the information for your renewal application. Well, then all of a sudden they're not there anymore, and a new person takes over, and they don't have a clue on building updates or anything. So records, good records need to be kept on everything that's done as far as updates, so a new person coming in can go right to that folder and say, okay, yeah, I can answer all those questions.
Boy, Deanna, I think that is really important. I know we do that a lot on the parsonage, but I'm not sure a lot of churches keep those great records on the church when systems were updated, air conditioner, plumbing. But that would need to be in a file, a good trustee file to pass along as trustees rotate in and out, and keeping those records up to date. So important. Good stuff.
Correct.
There.
Correct.
Jeremy, any final thoughts since you're the pastor and insurance agent?
I would say, and I think we'd all agree, start the process early. I know Deanna and I've talked about this, and I'm sure Jeff has the same issue, is sometimes churches will approach us in panic mode because they've got 2 weeks and they've gotten a really big increase in their premium. Start the process early. Start looking at it earlier. Start making plans earlier. Talk to your agent early in the process, and be willing to ask questions about, okay, what are our options? Because most of your agents should be able to actually list out, here's all the options you have. Here's some things to look at. Here's some different scenarios you can look at. We've mentioned a bunch of them during this meeting. And so really kind of being able to look at all of those options together, I think is good. So.
Thanks, Jeremy. thanks to all who, thank you all, Jeff, Deanna, Jeremy, Jonathan. Thanks so much for taking time out of your day to help us. And those of you who are still on, if y'all do have questions, feel free to reach out to me, Rick at westplainsgmc.org. I'll try to connect you or help get you to the right people that you need to talk to. I'm not an insurance agent at all, and so I'm learning along the way as well. But God bless all of y'all. Thank you for your time. Y'all take care.
Thank you.
Just final thought, we will be posting this, recording this, and so we should have this for others to go back and watch as well. Y'all take care. Peace.
Okay. Thank you.
Thanks.